Good afternoon, ladies and gentlemen. Of course, I say good afternoon to those of you joining me here on the East Coast. We also want to say good morning to those of you joining us from the Central Time Zones, the Mountain Time Zones, and the Pacific Time Zones. And of course, good early evening if any of you are joining us from across the pond there in parts of UK, parts of Europe, and good early morning if you're joining us from parts of Australia or Asia. Well, welcome to today's presentation. Today we're going to discuss using the PowerOptions tools to find new options trades. We're also going to discuss some of the criteria, of course, and strategy behind finding new options trades, in particular strategies as well. Now, for those of you who don't know me, my name is Mike Chupka. I'm the Director of Education here at PowerOptions. I've had the great pleasure of working with Ernie Zerenner, the President and Founder of PowerOptions, for the past 14 years. I do handle a lot of the coaching sessions, education, and obviously webinars for PowerOptions and radioactive trading. I have co-authored 2 books with Ernie on options investing. I am versed in all 23 plus option strategies that we support on PowerOptions, plus other strategies as well. However, there are certain strategies I've never traded in my personal account, things such as short straddles and short strangles, iron butterfly positions, and selling naked calls, which take on an infinite risk to the upside. Those strategies don't match my personal risk-reward tolerance, but if later on you do have questions about those, we'll be more than happy to showcase the tools for using those as well. Now, what we want to cover today is using the various tools on PowerOptions to find new options positions, whether we're looking across the universe of options in the patented search tool, or you're trying to identify a potential profitable position, a given strategy, one stock at a time. We're going to talk about navigating the filters of the search tool as well. As I mentioned, a quick glance at various strategies also, and general tips and suggestions for implementing the search criteria, as well as what tools you should be using if you're doing a particular strategy in a particular setup as well. So we do have a lot we want to cover today. So all that being said, we're going to navigate over to the PowerOptions suite of tools, and we're going to go ahead and jump right in. But before we start looking at the tools that are available, those of you that are here in the audience, what I'd like to know is what types of option strategies are you currently trading or researching right now? Are you mainly trading and researching covered calls or cash secured naked puts? Maybe you're doing leverage naked puts as well. Are you looking at insured position, married put plays, or potentially collar spreads? Are you looking at buying options, call buying, put buying? That also might include straddles or strangles around an earnings event. Are you looking at credit spreads or debit spreads? I mean the vertical spreads there, of course, bear call credits, bull put credits, debit spreads also, maybe even iron condors we could throw into the credit spreads. Or you're doing sort of the time spreads, calendar spreads, calendar calls, calendar puts, and more. All right, so we've got a little bit more than half of our audience already put in their votes. I'm going to leave the poll open for about another 15 to 20 seconds. So if you haven't voted yet, I encourage you to do so. It does look like we have representation in all of our categories. Of course, you can answer more than one, probably doing multiple strategies in our accounts. So you can answer more than one. Our results will add up to more than 100%, of course. All right, it's about even with 2 tied for the lead here, but everything else has an even representation. All right, I'm going to go ahead and close the poll now. We'll share the results with everyone. All right, and it does look like we have a tie. 56% of you that are in the audience today are doing covered calls and naked puts, and also doing call buying and put buying. And then a spread of about 44%, just a little bit behind there, for all of the other represented strategies as well. Well, no problem. All right, so let me go ahead and hide those, and we'll ask another poll in just a little bit. Now that we're back on the screen, what we want to do first is customize the PowerOptions tools to match what we want to look at today. Well, we already have some of the things selected: covered call, naked put, credit spreads, and so forth. But let's go into the other strategies tab here, and this will allow us to customize the view. Well, we'll leave covered call and naked put, and I don't have long call available, so I'm going to do is take out custom spreads from our available tabs there, and let's go ahead and add long call. We'll move that up to the top of the list for those of you doing the long options using the arrow keys here. All right, so that'll represent our top two categories. We do have investors doing protected positions, married puts and collars, of course, so we'll leave those there. Let me actually, all right, we've already got bull put credit, but I'm going to take out bear call credit for the time being, and let me go ahead and add in calendar calls for the time being so we can get a look at that as well. Now, once we've customized our view, I want to go ahead and click Save Configuration. Now we have the strategies that we want to see. What we want to do first is talk about finding new positions, one stock at a time for each of the available strategies that you voted on. So first, let's start off in covered call. When you click on any strategy tab, of course, you can see the quick view of the available tools underneath in the sub-tab menu, and also the links on the main strategy homepage. For covered calls, those of you doing covered calls, if I'm looking to find new positions one stock at a time, the main tools that I'd focus on would be the quick find tool, the search by symbol tool, and of course the option chain. Now, those are the same tools we might look for using the naked put strategy as well. I'm going to walk through each one very briefly. The quick find tool is a simple tool. All we have to do is plug in our stock symbol. For example, we'll just use, let's say, Apple. We're interested in doing a covered call on Apple. And then we can plug in our number of shares, and then we can put in a sentiment. If we're extremely bullish on Apple, meaning maybe we expect a 7 to 8 or 10% move in the next 20 to 30 days. If we're neutral, if we expect Apple to stay within a 2 to 3% trading range, or maybe up to a 5% trading range over the next 20 to 30 days or less. And if we're bearish, if we're thinking the stock's going to maybe fall, probably use a different strategy than a covered call in that case. We'll just leave it at neutral. And we'll just click the tab here to get the money on the table report. And this gives you just a simple breakdown of potential covered calls that we might look at. With Apple trading at 106.45, we could look at the monthly September 107 call. We could generate $148 per 100 shares, and this would give us a max profit of 203. This is sort of just a monetary breakdown. It's not giving you the percentages of probability or delta or more of an extended view. It's just showing you the basic monetary movement as well. Okay, all right. Now, of course, if you want it to be a little bit more conservative, we could sell the at-the-money 106 call. We'll generate more premium up front, naturally, but then we'll have a lower max profit if assigned. If we sold the 106 call, even though we're taking in 198, we're giving up 45 cents of intrinsic value. But that's okay, because we'd get the money up front here on the table, and then, of course, we'd still have a reasonable profit, but we increase our downside protection. And if you wanted a little bit more safety, we'd go in the money, generate a higher premium up front for that better downside protection, but you'd have a smaller profit. So this is just a quick tool, why it's called the quick find tool, just so you can get a basic overview. Now, the search by symbol tool for covered calls and naked puts. This tool will allow you to put in up to 15 symbols at a time, and you can put in 5 different blocks, sort of like tracking your own record there. Okay, so if you have 20 to 30 to 50 stocks you're tracking, you could set those up here. But this tool will allow you to select if you want to look at all weeklies, or if you want to look at the different monthly selection. I could go back to September here, which is only a few days away. And this tool is just going to show you the basic in the money and out of the money call opportunity for your potential stocks. We see a little bit more data here. We can customize this using the Choose Columns feature, but we see additional filters such as the total net debit for the position, the 3 important returns here, the max percent if assigned, the downside protection, the percent if unchanged, the probability of assignment selected, volume and open interest, earnings per share growth on the stock, dividend yields, and if there's a dividend date as well. And again, you can customize this view any way you want to. So if you're trading covered calls and you typically find that you just sell the one at or the one strike in the money, you're basically selling the at the money, this search by symbol tool will be very helpful for you. However, if you want a wider range of potential values and you want to see more potential strikes one stock at a time, I'm going to suggest using the option chain for covered calls and naked puts. The reason why is that on the Power Options chain, we show you the important criteria that one would want to use for a covered call trade, or you can customize it to see what we'd look for the naked put trade as well. We simply put in our symbol, click on Get Chain. Now we have all the available expiration dates for us. 2 days out, expiration this Friday, September 9th, 9 days away, and of course we can look further if we wanted to go to September 16th. If we wanted to look at all months, we can compare the max return for the covered call, of course, versus annualized as well. As we saw in the previous field, we can edit our columns here using the Choose Columns feature. So if I wanted to view things such as the percent of assigned annualized, the downside protection annualized as well, or any other filters that you want to add that you use to analyze covered call comparisons for different strikes, that's available as well. Let me switch stocks very quickly. I'm going to use something else here. I'm just going to use Texas Instruments, clean up the chain a little bit. Now, they're starting to offer 50 strike differences in the weeklies now as well. Yeah, let's go to... Is BCC still there? Oh, sorry, folks. Let's just go there. There we go. Okay, so here is a position that doesn't offer weekly options, but when I'm looking at the next available series for September, I can quickly compare what is the downside protection going in the money or the out of the money strike, as well as if I wanted to look at the percent if unchanged and the percent if assigned, we can also compare that annually as well. Bob says, go ahead and look at Twitter. Okay, well, it's the same features. Okay, you just decide based on what your risk-reward tolerance is, what you'd want to see for a covered call in a given selection, by comparing the percent if assigned to the downside protection, the highlighted columns. As always, Bob, you can customize this any which way you want to as well. And let's see here. Frank asked a question. Yes, Frank, we'll get to that in a minute. We're just looking for positions. So Frank says, we're going to show this on search. Can you do a scan on Thursday for a covered call ATM so you'll be assigned on Friday? No guarantee you'll be assigned on Friday. You can look for positions. If you're looking at the money, you know, Frank, you're starting off with just a 50% probability. Okay, that's pretty much the definition of it. Can you find positions on Thursday that could go into Friday where you might find a 1 to 3% return? Sure, we'll get to that when we're in the search. All right, we're just looking one stock at a time now. So for example, on Twitter, as Bob mentioned, we could see here that I could potentially sell the 19 strike call for this Friday, slightly in the money, be about 50 cents to 54 cents. We could get a yield of about 1.1%, and we'll have a probability of around, let's say, 50% or so, 52%. It's not a guarantee we're going to get assigned. If we want a higher guarantee and we go deeper in the money, now we're going to potentially lose that return. If you're speculative on Twitter and you thought it was going to move up above 1950, you could make 2.5% with a 19.5 call there, but that's assuming that the stock moves up to 1950. You're in the money at expiration, of course, as well. So the chain will show you both. All right. Now, for those of you doing long calls and long puts, when we go to long call, we can access the option chain to allow us to see which options are available, just as we saw with the covered call. However, a better tool to use for long calls and long puts, looking one stock at a time, is the long option finder. Whether you're trying to do shorter term plays or whether you're trying to do longer term plays, the long option finder is going to allow you to put in your stock symbol. And at the same time, if you're trading a long call or a long put, it's because you have a specific sentiment that you're bullish or bearish and the stock's going to move up. You have a target price for that stock. Maybe it's going to move up 3% in the next 10 days. Maybe you think it's going to move up 10% in the next 20 days or so. So let's say that for Apple, we know that's trading at 106.45. Let's say I have a sentiment that the next 2 days might be bullish, and I might go as high as 108.50. We might gain 2 points in the next 2 days. And let's say that I'm planning on maybe putting in $1,000 into contracts for Apple. All right, and then my expected target date, of course, let's just go ahead and put in September 2nd. Now let's go ahead and submit that, see if we get any results. All right. In that brief instant, what this long option finder tool did is it went out and looked at every available option on Apple, grabbed the current price, calculated how many contracts we could buy based on our investment. Then it ran the Black-Scholes pricing model on every option and showed you which one would give you the best theoretical return if the stock hit your target price on your target date. So in this scenario, if Apple did move up to 108.50 on September 2nd, we see here that the out-of-the-money 109 call, September 9th expiration, currently trading at 47 cents, would give us the highest return, a 106% gain, if, of course, Apple was trading at 108.50 on September 2nd. Now, if I move this back one day, of course, we'd probably see the other weekly series. So let's just go to 9/1. And here we see that the 108 call at 12 cents would give us the best potential return, be about 72 cents on Thursday with some time value remaining based on the Black-Scholes pricing model, as well as still having a little bit in the money. Okay? All right, so a long option finder for those of you doing long options. And of course, if our time frame was further out, let's say in Apple we expect it to go back up to the 112 or the 115 range on or around September 16th or before September expiration. Let's go September 15th. What we're going to see here is that further out options naturally will give us the best return, even going to September 16th or September 23rd. But it's always sorting it by which one will give you the best theoretical return. So what this tool satisfies is when you're looking at an option chain and you're trying to manually work out, well, what is the cost of each option? What would it be worth if the stock hit this price? And which one's going to give me the best return? The long option finder tool does that for you. And of course, even though I accessed it under the long call menu, if I had a reverse sentiment and I thought that Apple might drop down to, let's say, 102 by September 15th, now it's going to show me the puts that give me the best value as well. Okay? All right, so that's for covered calls. I recommend using the option chain, looking one stock at a time to compare results, but the quick find tool is useful if you're more focused just on the money on the table and premium as well. For long options, we want to use the long option finder to put in your speculation. Now, for those of you doing credit spreads, there is a search by symbol tool as well. So let's say I was bullish on Apple again. We thought it was going to move up in price. I'm going to take a look at some of the weekly series here. And this, opposite of the covered call and naked put screen, which allow you to put in multiple stocks at a time, here with the search by symbol tool, we're just putting in one stock at a time. And, well, we do see which spreads are available for the weekly series for 2 days out, for September 2nd, 9 days out, and of course going out to the 23rd, the 4th week out cycle also. We can see the probability and the net credit, but here, even though it's only 2 days out, I probably wouldn't trade a spread that only has a 61% probability. I'd want to maybe look higher. So there's a different tool that you should probably use, those of you doing spreads. We want to focus on the spread chain. This is a real simple tool which allows you to look at credit spreads if you just want to look at bear call credits and bull put credits on a particular stock. You can also look at the parity trades. So if I was bullish on the stock, I'd want to look at the put credit to evaluate bull put credits, but also see bull put debits as well. Let's take a look here. We'll go out to the 9th. So I'm going to put in Apple. And we're going to look at the base credit spreads, both bear calls on the left and bull puts on the right. But we're going to put in just some base criteria. This is a feature that's not available in the search by symbol tool when doing spreads, but will allow you to fine-tune it one stock at a time in the strategy. We're just going to look at a spread width of 5 points. Going 2 weeks out in time, we're going to go to September 9th here. So going 2 weeks out in time, we're going to look for a minimum net credit, let's say of at least 25 cents. Want to be at least maybe 1%, that's good, 1% out of the money. Want a good leverage return of a minimum of 9% against my 5-point spread. And let's start off with a probability above for the bull puts of 70 or the probability below in the bear calls of 70 as well. And let me go to the 9th here. Let's submit that. All right. So we only have one spread that matches our criteria, and that's a bull put spread looking at the 99-104 strikes. none of the bear calls are giving us the return or the minimum net credit that we want. And this tool is actually using the midpoint calculation for the out of the money positions for the credit spreads. Let me label this up a little bit. Let's put this at 15. Let's put the minimum return at 8, but leave the probability at 70. I'll show you why I'm doing this in a second. Okay. So now we only have two. The bear call is over here on the left, and our bull put is over here on the right. Remember, the stock, of course, is trading at 106.45. So what this might be a useful tool to use, in addition to seeing which bull puts match your criteria or which bear calls match your criteria, if you wanted to build an iron condor on the fly, one stock at a time, where both spreads, the bear call and the bull put, match your basic criteria, well, in this case, in Apple, I'd look for that bull put at 99.104 and the bear call at 109.114 to create my bear call credit spread and my bull put credit spread to create the iron condor position. Both have a probability above 77%, and we're getting, about 40 cents or so for each one. So it'd be an 80-cent net credit against both positions. Okay, so we'd get about 80 cents total for the iron condor with only a 5-point risk. Now, the debit parity view, let's say that we were bullish on Apple. We wanted to do a credit spread. We're going to switch this over to the put credit, and call debit parity. Again, I'm going to put a 5-point spread, minimum 15-cent net credit, at least 1% out of the money for the weekly. Minimum return, let's keep that at about 9%. I'm going to keep the probability greater than 70. Let's see if we get any results here for Apple. Okay, again, so we only get the 1. We could lower this to 10 cents, and we could lower the return down as well to get more results for a 2-week trade. But what this quick view shows us, we're still looking at the bull put over here on the right-hand side, but over here you have the parity of a bull call debit. So with a bull put, we'd be selling the 104 put and buying the 99 on our spread trade tool. And that would give us a net credit of 42 cents or a return of 9.2%. However, if you felt confident you were going to get midpoint prices, you could do the same spread by selling the 104 in the money call for $7.25. I'm sorry, for $2.95, my apologies, and buying the 99 call for $7.52. This would be a debit of $4.57, but if the stock stays above 104, same risk-reward profile as the bull put credit spread, you'd close it out and make 43 cents or a 9.4% return. So this one, the debit spread's giving you a little bit more bang for the buck in this scenario. Okay, so spread chain tool is very useful for one stock at a time. Now the other strategies, of course, those of you doing the calendar spreads, the married puts or the long collar, you're going to see a similar setup. What you'd want to use is just the search by symbol tool. Again, you just plug in your symbol, and then for things such as the collar or the calendar spread, you can choose the near month. For example, for a calendar spread, let's go to September, and I'll choose my far month. Let's go out to January. And so now we'll see the combinations of calls that we'd be selling and calls that we'd be buying for the calendar call spread. And we have the debit field shown, the percent return if assigned shown as well, the probability of the max return also being shown. Of course, you can customize this just as we saw on the option chain and the other search by symbols. All right, so for review, covered calls, the quick find tool is useful, but you get more data using the option chain. That's the tool I prefer for covered calls and naked puts, looking one stock at a time. Buying calls and buying puts, you want to use the long option finder. And for credit spreads, debit spreads, or possibly iron condors, you want to click on the spread chain there to customize that down a little bit more. Now, for searching across the universe of options, we're of course going to use the search tool. Go back to covered calls now, and just as we saw before, we have some new features that we want to analyze very quickly. Ernie spent some time recently, over the past 2 months, doing historical backtesting on different search criteria. And what he came up with is 2 different search results where he maximized the return over time for covered calls and for naked puts. Pretty soon in the next month or so, you're going to see picks of the day available, for spread trades, and other strategies as well. So the picks of the day is just a quick view. And what you see here is there's 3 results that are shown. The picks of the day standard for covered call just shows you the next monthly series greater than 30 days out. So September is under 16 days away, so it's looking out to October. So you can see the percent return if assigned pretty high on most of these, but that's 51 days out. And of course there's discussion here. We're showing you exactly what criteria are being used for that. And of course you can read more about how the results were developed, what earnings backtesting process was for each of the individual ones. For those of you doing weeklies, you can look at the weekly picks of the day. And here is just some returns that we see around what kind of close to Frank was asking for, 2 to 3 days out for the September 2nd, but we're seeing returns of 1.3%, 1.2%, and 1.1%. So if you want to see some quick views of some quick trades that are available, you can always use the picks of the day. Again, it's just available for covered calls and for naked puts. You have the picks of the day and the weekly picks of the day, but other strategies will be coming soon. You can always read more about that here. Now, for finding specifically what you want to see in any strategy, we just want to use the search tool. We have theme searches set up for you in the sample searches menu in every strategy. So for covered calls, you'll see things such as the broker and advisor recommended, dividend covered calls in the money, dividends and out of the money, and there's some low-priced ones available as well, such as the 25 report, under 25 report, just stocks under $25 per share. But if you have a specific idea in mind, as Frank mentioned, in any strategy, what we typically want to use is the search tool. When I click on the search tool in any strategy, we're just going to see the listed trades that match the default criteria that are down below. In every strategy, you'll see a variety of default searches to use as a stepping stone to create your own personal search. For covered calls, we've got an initial values at the money. There's an in the money search, the picks of the day criteria that are used for monthly, and a basic weekly covered call search as well to help you get started. But anytime you have a specific question, a specific strategy in mind, we want to scroll down below the listed trades, and here we see the parameter field. It'll look very similar for every strategy. You can set criteria for the options, selecting your time frame. If you want to play around with implied volatility, of course the return field for covered calls, you can screen by the percent if assigned, the downside protection, percent if unchanged, and annualized returns to match your goals. Your needs for in the money or out of the money if you want to be more conservative or more speculative. The strike price ranges, we can set our probability, minimum option bid price to receive, Black-Scholes ratios, and of course liquidity. Then you can also screen at the same time for the type of stocks you want to see. Whether we want to use technicals and look for stocks with good volume, or if you want to look for something that's trading in an uptrend with a simple moving average, or if you use MACD, of course, you can enter that as well. And the fundamentals, keep my price range in view if I want to look for stocks with good earnings growth, a relative PE ratio, market cap, and more. Okay, so Frank posed a question. Many of you might have a very similar question. Can I do a scan today or tomorrow for covered calls at the money so I'll be assigned on Friday looking for a 1 to 3% profit? Absolutely. Just go ahead and clear the filters in your search, and then you want to set up the basic view. So I'll go to Options, and we're going to select to look at all months, and let's just set our days to expiration to be between 0 to 3 days out in time. Okay, so we're just going to focus on what's going forward there. We want a minimum percent return if assigned of 1%. We probably want a percent if unchanged of 1% as well, and a downside protection. The downside protection, of course, shows us the premium we're collecting against the underlying stock price divided by the stock price. What that essentially shows us is how far the stock can fall before we're technically losing money on the position. And anytime you have a question about a particular filter, just hover over that and you'll get a quick definition and description of using that filter. So we're just looking 3 days out, minimum 1% return if assigned, percent if unchanged, and downside protection. Now, the other requirement is we want to be at the money. So I can focus to be a certain number of strikes in or out of the money, or by percentage of the stock price. So if I want to focus on at the money, I'll tell the system only show me covered calls that are less than 2% in the money and less than 2% out of the money as well. Now, going at the money, as I mentioned, is a definition of having about a 50% probability of assignment. You could increase that and say we only want to see positions that are greater than 50% probability of the stock trading above that strike, but that would focus it to the more in the money range. So we're just going to leave the probability alone for the time being. And let's go ahead and submit that search for the next 2 days. All right, so we see a lot of things here with the 3 times and 2 times bull and bear ETFs. We have 172 total results from that basic search. Out of the entire universe of options, we've just narrowed it down to 172 with putting in some basic criteria. But maybe you're not a fan of the 2 times and 3 times ETFs as they can swing more wildly against you. Also, some of these positions might have earnings coming up this week. You might not want to be in a covered call or a naked put or even a bull put credit spread or bear call credit spread with earnings coming up, because what looked like a good position can turn into a loser very quickly. So we're going to want to tweak this a little bit. The first thing I'm going to do is go into that fundamentals field. We're going to check the box to remove earnings between now and expiration. I'm going to check the box not between now and expiration to remove that. Now I'm also going to go into the lists field. Okay, the list function in every search will allow you to screen just against a specific stock list. So if I wanted to narrow down my search just to look at stocks in the NASDAQ 100 or the S&P 5-star, those stocks rated 5-star buys by Standard & Poor's, for example, if I just want to look at the Standard & Poor's 100 or the IBD 50, Investors Business Daily, we could do that. What I'm more interested in is I want to exclude the leveraged ETFs, those 2 and 3 times ETFs. I probably also want to remove the inverse ETFs, but we'll just start. I'm going to remove the leveraged ETFs and avoid stocks that have earnings between now and expiration. So get rid of those 2 and 3 times bull and bear ETFs. And there we go. We now have a list of 118 covered calls that will expire in 2 days, will give us a return if assigned of at least 1.8% if assigned, and our probabilities, as I mentioned, are all around the 50% range for this particular strategy. We could filter this down more, absolutely. So now we could go back in and say, you know what, in addition to that, I see low price stocks here which have a high volatility, but I could adjust my stock price range. If I just wanted to look for mid to large cap stocks, I could use the market cap field. And the mid cap here would start at 2,000 because this is measured in millions. So I'll just put in a market cap of greater than 2,000. And once again, we've narrowed this down a little bit more to 97. And I could even go to other things if I want to put in an average stock volume, or if we wanted to look for stocks currently trading in an uptrend as well. Let's start with that. Okay, so now, what have we done? We created the basic search for Frank's criteria and a covered call. We're looking 3 days out in time, minimum 1% return if assigned, and 1% downside protection. We limit it to be at the money. We want stocks that are in an uptrend, trading above their 20-day moving average. We wanted mid-cap stocks. We wanted to avoid earnings, and we wanted to avoid leveraged ETFs. That was about 9 clicks, and we've narrowed down the universe of options for Friday's expiration to only 36 covered call trades that have the return within the range that we want. Is this a guarantee you're going to make this return? That the stock will be trading above those strike prices? Well, absolutely not. You know, going at the money, you take that sort of 50% probability. Again, if we wanted to increase it and look just for greater than 50% probability assigned, we'd add that into our filters as well. All right, and now we've got 16, but the return is slightly lower. A lot of those higher returns near that 3% range and the upper level of what Frank was looking for with the other criteria, those of course got filtered out because they were more out of the money and they had that lower probability. The percent return if assigned was based on the speculation that stock would go above that strike price in the next 2 to 3 days. But here's 16 here that offer that minimum 1% yield for a 2-day trade. These are not recommendations or suggestions, of course, just how easy it is to set up this search tool. I know it can be intimidating at first when you go into a search for a given strategy and you see the multiple criteria that you can use for the options, for the stock technicals, and the stock fundamentals. But the key is to just focus on those criteria that you would generally use for the given strategy first, and then fine-tune it with the other criteria that are available. Let's take a look at bull put credit spreads. Let's say I'm interested in trading a credit spread not for this coming expiration, but for next week, September 9th, going about 12 to 14 days or 9 days or so out in time. All right? And what do I know about a bull put credit spread? Well, it's a neutral to bullish position, so I'm going to want stocks that match a neutral to bullish criteria. At the same time, I probably don't want too wide of a strike price. I want to keep that within a reasonable range. I want to look for a good probability that my short put option I'm selling would remain out of the money. So we're naturally going to use probability and look for a range out of the money. And at the same time, of course, we want to make sure that we get a good net credit as well. Okay, Gunter asked a question. What is a good source for getting market prediction, and is there a source of the expectancy calculation? Okay, well, let's pause for a minute. We'll come back to bull puts in a minute. What I use for the market tool, of course, the sentiment, I use the market sentiment tool. The market sentiment tool here shown on PowerOptions is a review of 13 broad-based market indicators. And what Ernie did with testing on these 13 broad-based indicators is he looked for patterns over time and which ones had the most affected when there was a switch in the market in one direction or the other. For example, we'll just take put call volume ratio. Let me show you the distribution here, Gunter. What this distribution is showing you is the put call volume ratio values at any given time over about the last 10 years or so using our historical data. Okay? And what we see here is that, well, if we drop down to a put call ratio of about 0.53, very rarely does it ever go below that. And so Ernie set up a fence historically that when, of course, the put call volume ratio drops to this level, meaning there are many more puts than there are calls, 0.56 is where we set the fence. So if that hit 0.56, and it's almost, I'm sorry, it would be the opposite there, but that would be a bullish indicator, of course, a bearish indicator, and we'd see this go into the bearish indication level. If we're up here, where there's more calls than puts, it would reverse and go to bullish. I did say that wrong. Okay, so here, when we have the 0.54, when there's more calls than puts and it reaches this ratio, it actually goes into a bearish mode because it reverses. And likewise at the top here, when we have a high number of puts versus calls, that's actually a bullish indicator. So if this goes up above 1.16, this would switch to the bullish indication. Now right now the VIX is bearish and the SPX days over the SMA 100 are bearish. So we have 2 bearish indicators and 11 neutral. Well, that still puts us sort of in a neutral market. But once this starts to go to 3 or 4 bearish indicators and we're hovering around 9 neutral, then we'd see a bearish sell warning or a strong sell warning as well. Reverse, if we see about 3 or 4 bullish indicators and we've got 8 neutral and 2 bearish, we might see a bullish warning as well. Okay, well, I use this not only for entering trades but also managing trades as well. So let me go back a little bit here. I'm going to go back to 8.1 where we're still at neutral. Okay, we've been neutral for the past month or so. And let's go back, and here we see at the time, can't open this further, but around July 11th was the last sell warning that was indicated. And the SPX was at about 2100. So 712, there was a bearish sell, and a strong bearish sell as the SPX went up to 2161. Okay, so then we saw what started to happen after that is it stayed neutral, but then as we went forward into 8.1, let me go to current here. There we go. Let's go back here. So after 8.1, of course, we stayed neutral, but it did pull back and drop down from that 2170 down to 2150, and then it's been hovering around those ranges as well. So this one wasn't as strong as some of the other bearish warnings that we've seen, but that's what we use for the market sentiment. So if I'm in a covered call, for example, and I see a bearish sell or a sell warning, well, I might consider exiting the position if I've neared my profits, because I don't want the market to pull back and then what was close to a winning trade, or where I'd realized maybe 75 to 80% of the profit on the call, I don't want to leave the downside of the long stock open. Or I may roll the call down if I have a profit to a lower strike. If I'm in a married put position or a long call position and I see the bearish warning come up, I might quickly buy a put option to sort of create a synthetic straddle or a true strangle with my long call position for protection in case the market or when the market pulls back. If I am in a covered call and I see a bullish warning, I may consider buying back that call and rolling up to a higher strike, okay? Just because I want to give myself more upside. But if my plan was to be assigned on that covered call or have that naked put expire worthless, then I might just leave it at that time as well. Okay, and of course, at any time, Gunter, you can watch the help videos here for a description on using the market sentiment tool for entering trades as well as for management of the trades also. All right, so I'm going to go back to bull put. Oh, and related to your second question, Gunter, there is not an expectancy calculation right now on PowerOptions. We are programming that in. It'll be there eventually, but you can use some of the fields that are there, the probability, percent return, and there's a blog article over at Radioactive Trading which shows an expectancy calculation that you can use as well for different strategies. All right, so sidetrack. Back to where we were, bull put credit spreads. What did we know? We want stocks that are bullish to neutral. They're going to be moving up in price and maybe have shown strong growth. I want to have a reasonable spread width. Okay, I don't want to do a 20-point or a 30-point spread if I'm only making 10 cents. We're going to go shorter term as well. We want a good probability. Okay, so we want a good probability. And of course, we want to have a reasonable return as well. Is that enough to create a search for a simple 9-day trade or a 1-week out trade? Absolutely. So how are we going to do it? Once again, we'll go to bull put as we are. We'll just go directly into the search. Now again, you can review the default criteria that are listed. I could use the default weekly bull put here. I see positions out to standard September expiration 16 days out. We are looking 8 to 17 days out in time. So 9-day out strategies will be there, but let's focus it on what we want. So first things first, let's clear out the filters and let's set our time frame. Okay, we can look at all weeklies, but I prefer to use all months. It's really all months means any expiration, standard expiration or weekly expiration. And I'm going to put in 3 to 10 days out in time. So I want to go past this Friday's expiration. I just want to look at next week. Minimum net credit, let's put that at 15 cents, all right, for right now. And my percent return, we want a good leverage return on our position. So let's call it at least, again, we'll start with that 9% return. Probably going to want to be at least 1 to 2% out of the money. Now, if I'm looking for a monthly bull put credit spread, one that's 30 days out, for example, or maybe even October that's 51 days out if I'm going that far out in time, I might go 7% out of the money or 5% out of the money or more. Okay, but for the weekly, I'm going to narrow this down to just 2% out of the money. But more importantly, I'm going to start off with that probability. Theoretical probability my stock will stay above my short put strike price of at least 70% or more. In addition to that, let's put in some liquidity. We want to see an option volume today, at least some contracts. And let's put in an open interest of at least 50. All right, so basic. My correct time frame to look for the 9th of September expiration, about 9 days out. Net credit requirement, minimum percent return. Reasonable range out of the money, but I'm focusing more on probability as well. You could put in other things for implied volatility ratio, Black-Scholes ratios if you want to do that. Limit the bid-ask spread. Oh, and also my strike difference. I'm going to change that too. We're going to keep my strike difference less than or equal to 5. Okay, so we'll see 1-point spreads, 2-point spreads, 2.5-point spreads, but anything less than or equal to 5. If I just want to see 5-point spreads, I would just set it equal. Okay. Now, I want to put in some other basics here that we mentioned. We wanted stocks that are neutral to bullish and have shown potentially good growth. So go to the technicals. Since we're looking at a shorter time frame, keep that same uptrend, I'm going to look for stocks trading above the SMA 20. And I don't want maybe any low traded positions that tend to move around. So for the average stock volume, which is measured in thousands, put a minimum requirement of at least 750 or 750,000 shares per day for average stock volume. And for the fundamentals, probably going to stick with that mid to large cap. And what do we know specifically about spread trades? Don't want to take the risk of going through earnings in the next 9 days and having a stock gap down 25%, where my bull put spread looked really good, but now all of a sudden I'm at a max loss still with 5 days to go. All right, so we just looked at mid-cap stocks with good volume that are trading in an uptrend. Don't want to see any stocks that have earnings between now and expiration. Look for some basic liquidity on the option, good probability, set my spread width, minimum net credit, and minimum return. Just about 6 or 7 criteria. Let's go ahead and run that search. To tell you, every 20 minutes, the database is building close to 1.3, 1.4 million credit spreads with just 6 basic criteria of looking for quality stocks, again, that are trading in an uptrend, don't have earnings between now and expiration, and are giving us that 70% probability or more. We've narrowed down the universe of options to a nice, manageable list of potential bull put credit spreads with just 36 results. Now, of course, we can filter it further. Well, if I'm happy with a minimum probability of 70% of positions that match this criteria, probably be higher with a probability of 75. So let's just ramp that up while we're here. Take those 36 trades down to about 23. And then we could say to ourselves, well, if I'm happy with a 15-cent net credit, probably going to be happier with a 20-cent net credit. Let's see how this limits our results. So now we're down to 14. Just a few simple tweaks. We now have only 14 positions that match our requirements for percentage return. Time frame to September 9th, 9 days away. The probability that we want. And of course, the minimum return. And all of the stocks match that requirement of being in an uptrend and mid to large cap stocks that don't have earnings between now and expiration. So now we'd be able to further research and analyze the positions using the more information buttons, of course. We could take a look at the profit and loss chart for the position, see if there's anything in the headlines that would cause us hesitation. We could look at the positions using the spread chain for this particular stock once we look at the stock chart and the company information to make sure it's a company we want to invest in. Narrow it down quickly to which spreads we're going to enter for our next cycle as well. Okay? And that's the same process that we'd essentially use in every strategy. Now, for many of you know, let's see, the 44% of you doing the other strategies, for long calls and long puts, when you go into the search, I would start off with the default criteria here. You've got one that's focusing on Bollinger Bands. Okay, so Ernie's using a Bollinger Band setting here to look for positions that he would typically enter, looking for near breakout for a long call or for a long put. From the long put, we'd see a Bollinger Band search as well. And that has to be in the upper top 10% of that band. So that's a good one to start off with for potential long call trades. Now, that being said, notice that our defaults, we prefer to go further out in time when we're looking at long calls and long puts. We want to give the stock more time to move in our direction. And if I buy a call that's 4 months out in time, I'm not paying 4 times the cost of buying the monthly option or the weekly option. Okay, so although I'm paying more money up front, I'm not paying 4 times the cost. This is the same reason why when we trade married puts, we advocate buying the put at least 5 months out in time, because you're actually paying a lower cost per day. That's why when we sell, we want to sell near term. When we buy, we want to buy long term. But if I had a customer the other day ask me, how can I create a search for long calls and long puts looking at weekly options? It's not something I would do. I'd want to give myself more time. But if that's what you want to do, again, you can clear the filters. And just as we did before, let's set this to 3 to 20 days out in time for shorter term calls. And then you just put in your other ranges of what you want to see. For long calls, long puts, and straddles, you won't see that return field. Okay, you won't in married puts either. Okay, the return field, of course, can only be calculated on things such as when we're generating premium up front, or maybe I'm doing a calendar spread against the position. All right, so you can change your time frame and then put in what you'd want to see for the stocks that interest you most as far as growth, just as we saw before. In every strategy, You'll have the same fields for the fundamentals and the technicals that you can use to look for stocks in an uptrend, near a Bollinger Band, if you want to use stocks over a certain MACD line as well. And you can choose just to screen against certain lists or remove certain lists. By the way, at any time you can create your own personal stock list. So if I just wanted to look at long calls that were 3 to 20 days out on, let's say, 5 particular stocks, I just go to Create and Modify List. And let's just pick on some of the big boys today. When I get in my list, I'll click on Create List. And we'll just call it Common Stocks. And what do I mean by common stocks? Well, we'll go ahead and put in symbols such as Apple, Amazon, Netflix, Priceline perhaps, or anything else you want it to put in. So let's just create those 4. I'm going to create the list. Now we see my available stock lists here. All right, so let's go ahead and close that down. Now once you create a list in any strategy, I just created this in long calls, but at any time I can go into covered calls, naked puts, and calendar spreads and pull up that same list to screen against in the list field. So we're looking 3 to 20 days out. We don't want to pay for the option ask price. Let's say we don't want to pay more than $5 per contract. Want some good volume and some good open interest. Okay. Not going to be worried about range in or range out of the money at this time. I mentioned that in long calls and long puts, you won't have a percent return. But what I can set is a percent to double. The percent to double shows us what change in the underlying stock price would we need for the option price to double. So in theory, when buying calls and buying puts, I want to look for a lower percent to double. So I might look for something, let's say, less than 5. But I also realize that means I'm going to be looking at out-of-the-money calls which have a lower premium. The deep-in-the-money calls would have a percent to double of maybe 12, 15, or 20%, depending on how deep in the money you're going. All right, so we're going to look for less than 5 on the percent to double. And am I have to set anything for the stock technicals or stock fundamentals? No, because I'm going to go back to the lists. I'm going to choose common stocks. Let's go ahead and submit that. All right, and so now here we have 2 different time frames, the 16-day out and the 9-day out for different stocks for Amazon and so forth. If we just wanted to shorten this to the 9-day out, let's just go to 3 to 10 there. Okay, so we have our calls available on Apple, and then we can start comparing what we'd want to see for the percent to double versus the range out of the money. If you wanted to make it closer to at the money, you could just change that using the in the money, out of the money ranges as well. All right, so, and as I mentioned, of course, if you're doing married puts, I suggest you start off with the default search for radioactive. That's what we suggest for the married puts. You want to keep your risk within the single-digit ranges. Don't want to go more than 20% in the money, but feel free to tweak any of the stock technicals or stock fundamentals. If you want to look at dividend-paying stocks for a protective position or for a collar, you can do that as well. All right, and last but not least, those of you doing the time spreads, as I mentioned, you want to use the search by symbol tool. The search tool for a calendar spread, same functionality, but of course we get a little bit more complexity to it. When I scroll down below the results, we can set our requirement for our near-term time frame. So for a calendar spread, if I wanted to sell weeklies, of course, just 0 to 10 days out in time, and I would combine that with a 1 month or 2 month out option, well, I'll set my near-term expiration 0 to 10 days, and I'll set all months, let's say September 16. So let's put this just out to October. We'll go 30 to 60 days, okay, minimum requirement. And then you can set up what you want to see for your minimum net debit or your maximum net debit, the return, the range in or out of the money for the short option and for the long option, and of course, different values as well. As starting points, there's a default here, search for same strike spreads if you're doing the horizontals. If you're doing diagonals, of course, you'd look at the initial values or limit debit to 20 points as a starting point, and then you can tweak your fundamentals and your technicals for what you want to see in a calendar call or a calendar put spread as well. All right, so that's just the basic review. I'm going to open it up. I'm going to review real quick. We're going to slip back to the slideshow there. But that's how we use these tools to find new trades in any given strategy on PowerOptions, right? So just as a real quick review, and again, I encourage if you have any questions, go ahead and send those in specifically. But when you're searching one stock at a time, if you're using covered calls and naked puts, I do recommend using the option chain. However, if you're comfortable with just looking at the monetary values of what you could get for selling a covered call, you could use the quick find tool. I prefer to use the option chain because I like to see those three fields for the percent downside protection, percent return if assigned, and percent if unchanged, as well as the probability and potentially volume and open interest. That's not shown on the quick find tool, but you can see it on the option chain. For those of you who are doing the long calls and long puts, you want to use that long option finder when you're going one stock at a time. If you already made a decision that you're going to buy a call on, potentially buy a call on Apple or Amazon or XYZ, it's because you have an expectation and that stock might gain 5% or 10% in the next 10, 15, or 20 days. So as we saw in the long option finder, put in your stock symbol, put in your target price, put in your target date, and then just an investment amount of usually how much you invest in call contracts or put contracts, and you'll see which one will give you the best bang for the buck, and it'll be shown to you in less than a second. Okay? Of course, those of you using the spread chain, as I mentioned, want to use that spread chain tool. If you're doing iron condors, we saw that one tab that was the credit spreads. It showed you the bear calls on the left and the bull puts on the right. That'll kind of help you gauge. You can set both legs up to build iron condors on the fly. Or you could just go into the iron condor tab and use the search by symbol tool. But if you've made up your mind that you're interested in bull put credit spreads on a stock or bear call credits on a stock, you want to use that tab in the spread chain tool. That would be the put credit and call debit parity, or call credit and put debit parity. So you can see, hey, if I was interested in doing one of these bull put spreads, will I get more money if I can get the midpoint doing the bull call debit? Sometimes you'll see a lot of parity, non-parity between them, where a bull put credit might be offering a 14% yield, but if you get midpoint on the bull call, it might be up to 18%. Okay, that's going to depend on how wide the market maker is setting the bid-ask spreads. And then for the other strategies, married puts, collars, and of course calendar spreads as well, just use that search by symbol tool when you're looking one stock at a time. Now we reviewed that for covered calls and naked puts, you have those picks of the day which you can use as a quick reference point and get quick ideas. And those are back-tested results where Ernie's tested them and tweaked them to get the best return possible using those particular criteria and those given strategies, whether weekly or with monthly as well. We also saw how simple it was to create your own personal search. Frank had asked us to, can you look for covered calls, where it just shows between a 1 to 3% if assigned for 2 days out that are at the money. Absolutely. We put in some criteria. Remember, clear the filters first and put in the criteria that you wanted to see. What were our needs? We needed to be at the money. We wanted at least a 50% probability. We knew we were looking 2 days out in time. We wanted a minimum 1% return if assigned for the covered call, 1% if unchanged, 1% downside protection. And then after we tweaked that and we added in some filters for avoiding earnings between now and expiration and looking for stocks in an uptrend, we had a list, I believe, about 16 covered call results for the 2-day out trade, specifically what Frank wanted. If you just wanted to look for positions on ETFs, or if you wanted to remove leverage ETFs, we showed that as well. So start off with the basic criteria that you have an idea of for your search. Once you get the results, when I ran that basic bull put credit spread, we were up to about 100 results or so, and then we quickly narrowed it down to only 14 results by just making 1 or 2 simple changes or adding 1 or 2 simple filters in as well. It's best that once you're creating a search on the fly, that let's say I've already put in 3 or 4 or 5 criteria and I have 80 results and I want to narrow it down, it's best at that time to put in 1 new filter at a time and hit submit. If I added 5 more filters on top of what I already had and I submit that and no results appear, I don't know which one of those next 5 filters really filtered out. So once you have your basic setup of those 5-10 criteria that you have outlined, then just tweak it further. Put in 1 new criteria or just 1 criteria at a time and hit the submit button as well. Use the default search or the sample searches as a stepping stone if you don't know what you'd want to do. So if I went into covered calls or bull put credit spreads and I pulled up the default initial value search, I said, okay, well here's 80 results, covered call results that match this default criteria. That's great. but you looked at it and you said, oh, I wouldn't trade this stock because it's too volatile, and I wouldn't trade this stock. Well, that's great. Now you have ideas of what you need to put in that search field to get out those ones that you want. You're using the default as a stepping stone to customize the search and make it your own. And once you create that search and you save it, now you'll be able to go back to it at any time. Remember, keep it simple too. As I mentioned, I know it can be overwhelming when you see all of those different criteria that are available and things of that nature as far as what you can put in for options criteria and stock criteria. But remember, don't be intimidated. Keep it simple. Do not use every criteria. If you put in something to every criteria in any given strategy, you'd be sort of no results, okay? Nothing would match that. So start with just the settings you know, and that never hurts to research others and start learning as you go on as well, okay? Start learning what those other criteria are and if they match that. Okay, so I'm sorry, Frank asked, do you have any pre-built stock scans, i.e. the F-score by Joseph Petrosky? Not really, okay? The default searches that we have here are ones based on being a stepping stone to create your own personal search. The picks of the day are based on Ernie's historical testing and maximizing results for weekly covered calls, and you can read more about those here. We have been partnered up with other groups before, so for example in calendar calls there is a default search listed for compound stock earnings. I personally prefer to use the initial values for my diagonal spreads, and if you're doing horizontal you want to use the same strike spreads and then customize it for your personal view as well. If you know this F-score by Joe Petrosky you're mentioning might be a I don't want to say patented or reserved one, but it might be proprietary screens. So if you don't have, you know, if Joseph here, he keeps his criteria of what he's using proprietary and doesn't post it, well, we wouldn't know it anyway, okay? But if he doesn't and he's shown you or you followed his techniques and he's shown you what criteria he uses, you know what to do. You can go right into the search, Frank. You can clear out the settings, and then you can put in the criteria that he wants to use for you. I can tell you right now, I don't have F-score as one of the default criteria. Another customer, in addition to you, Frank, asked about that about a month ago. We've looked into it, but of course we're doing other projects right now as well. So that might come out in the near future if we can have that data available for the F-score listing. We do have Z-score and Z-prime and Springgate as the filters that you can use in each strategy under the fundamentals, but I don't have the F-score right now. Okay, all right. Oops, okay. All right, so just wanted to remind everyone, of course, if you haven't done so yet, if you're not currently taking a trial to PowerOptions or you had a trial, you know, a long time ago and want to check it out again, just go to PowerOp.com and click put in your name and email address and then click Start My Trial. And you'll get a fresh trial there. We can test it out for 14 days. The subscription levels of service are end-of-day service, which only gives you data updates at the end of the day, is $40 per month. The most popular subscription service, where most of our subscribers are, is around the 20-minute delayed for $60 per month, or the real-time at $120. Now we do have back testing available on both the 20-minute delayed and the historical real-time plus historical. Those go up $40 per month from that as well. All right. So I don't see any other questions coming in. If anyone has a last-minute question, go ahead and send that in there as well. Remember, if you think of any questions later on, you can send us an email to support@powerop.com. Of course, we host other regular webinars during the week. On Friday, we'll have our open discussion, open forum presentation at 4:30 p.m. Eastern Time. Important question that just came in from both Harry and Samuel. Harry says, great webinar, can't keep up the notes. Was today's session recorded? And let's see here. Oh, Samuel says he lost audio in the middle of the webinar. I'm sorry about that, Sam. Is it possible to get a recording? Yes. Let's go back here real quick. There we go. All right, so at any time, you can access our archive webinars on the main home tab. Just click on free webinars. But this is actually a public page. I'll send everyone the link right now. Here we go. It's powerop.com/webinars.asp. Today's presentation will be archived here right above the PowerOptions portfolio tools. It'll replace the older presentation from 2015. Okay, so you'll see that here when you just go to powerop.com/webinars.asp, it'll be up here at the top. There's also a category here for option strategies. Okay, and I feel this is important. So here we have ones for selection criteria for long options. Those of you doing long calls and long puts, you have selection criteria there. We walk more in depth into the search tool of going into what criteria might be used and what are the default searches and how you might customize them. Managing your long options positions as well. There's a brief introduction to managing naked puts and adjusting them. And then, of course, the hands-on look for vertical spreads, bear calls, and bull puts, managing your bull puts, and managing your bear calls as well. Also some options concepts, weekly options, managing a broken stock, exercise versus assignment, implied volatility Greeks, and more. And then our Friday presentations are usually archived here under the requested topics. But today's presentation, as I mentioned, I will send you all an email when it is posted. And it'll be up here at the top under the Power Options tools on the main link at powerop.com/webinars.asp. But those of you that are trading the individual strategies, the naked puts, long calls, and long puts, or the credit spreads, you'll find a lot of useful information here as well. William asks, do any brokers accept direct input from Power Options? Right now, we just have that broker link set up from the searches and from the portfolio tools with Options Express. We were in conversation with Thinkorswim a couple of years ago, but when that buyout happened and TD Ameritrade went into Thinkorswim, they sort of put the kibosh on any third-party technical data or third-party data coming in at that time if it wasn't already established. We talked to Interactive Brokers. They're a little bit more receptive. We were talking with Trade Monster as well, and then all of a sudden they merged with Options House, and that was kind of a little bit lost after that merger happened as well between Options House as well. Okay, so right now it is just Options Express through that broker link that you have there, so you could go directly to the broker link to an Options Express account. All right. Okay, well, once again, ladies and gentlemen, thank you for joining me this afternoon. Remember, if you have any questions later on, send me an email to support@powerop.com. You can also call us during market hours. You can reach us at 877-992-7971. You'll either get myself or Ernie or Greg. And of course, if you live outside the U.S., you can reach us at 302-992-7971 as well. All right, well, thank you, ladies and gentlemen, for joining us for today's presentation. Expect that archived webinar to be posted, I'd say, around between 4 and 5 p.m. Eastern Time. It's got to do a conversion, and then I'll get that posted up there. Remember, it's powerop.com/webinars.asp, but I'll send you an email as soon as it's archived. All right. Take care, everyone. Have a great remainder of your week. We'll see you soon at one of our upcoming webinars. Take care. Good night.